Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway here with another market update. Now, we're going to look at the S&P 500 today. Is it getting back above a major technical level? Could we be looking at new all-time highs soon? We're going to explore. In addition, we have to look at the semiconductor ETF. That is the ETF that, in my opinion, controls the entire market. Is it near resistance? It's making a new all-time high, but could it be headed higher or about to stall out? And lastly, we're going to look at JP Morgan, which is interestingly in a parallel where it looks like it's getting ready to break down. Let's take a look at the S&P here on the charts. Number one, what do we have here, guys? We have our wedge pattern, which again, we've been following now for months. This is a low pivot from October of 2023 to the low here in August of 2024 and the low of January 2025. And notice how when you hit this line, you bounce up, then you come back down, you hit it again, bounce up, hit it again, bounce up. And then during the bear market, or I should say the correction during Liberation Day and the subsequent sell-off, we really crashed below that line. Now, when you break support, right? Support, support, and support, what does this line become? It becomes resistance. And that's how we get our highs that I was able to call on the S&P 500 here and right over here before this latest drop. Now, what we're watching here is after we broke this line, notice we never confirmed the breakdown. That would have required a secondary close below 65.50. And we've been chopping between this yellow line and this low here. Now, as of now, intraday, mind you, we are up above that level just by a hair. Basically, this trend line, guys, I would say is around 67.31 to 32. We're right now trading about 3 points above that on the S&P. So by the end of the day, we'll have to see. But right now, this would recapture this trend line. If it recaptures the trend line, it basically is able to float in this range. It obviously is capped a little bit by this upside resistance trend line, but it could easily just kind of chop sideways. And generally, you would consider this market saved at this point. Now, if it closes on or below, it is still at risk of confirming to the downside. All right. So really, it's going to be a very intriguing end of day close on the S&P 500. Right now, again, it is fractionally above by about 4 points now. And again, we'll watch and see. So lots to really, we talk about how important a chart is and how important every point is on the S&P based on what it tells us. Remember, every little move in the S&P is like a new piece of the puzzle for a technician of the charts because it adjusts probability. And when we understand that, we then understand how imperative it is that we watch to see where we close on the S&P. Do we close above this line, below this line, on this line? And then ultimately, what does it mean for the coming days? All right. Now let's flip back to the charts. I want to take a look at the semis because the semiconductor ETF, as we can see, has made a new all-time high. This was your previous all-time high here. We obviously have breached it today, albeit by a small amount. Now, one of the things that I think is interesting here is how much upside is there in the SMH? And again, I truly look at this chart as being the market. And why do I say the SMH is the market? And the answer is because at this point, if you add up Broadcom at a $1.6 trillion valuation, Nvidia at a $4.5 trillion valuation, AMD, I mean, all of these other semiconductor stocks, they basically are like a quarter of the entire stock market valuation right now. So they are, I mean, if you look at one sector, we all know that this market has rallied on the back of the AI trade. In fact, a stat that we all should be aware of is that 75% of the upside in the S&P in the last 2 years has been because of the AI trade and the ancillary plays that affect the AI trade, right? So that's a really big amount of upside that has been driven by the AI stocks, and therefore it essentially is the market at this point. Now, if we go to this, one of the things that's catching my eye, I always love going back to key levels. And what we can see here is if we go back to our COVID low, so I think we can all agree the COVID low, this collapse here was epic during COVID. I mean, people thought the world was ending. Looking at it now, obviously on the SMH, it doesn't look that crazy. But back then, the SMH actually dropped. Look at this, guys. It dropped within a matter of a month and a half, almost 40%. All right. Now think about that. What if the SMH now dropped 40%? Look at this. I mean, we'd be literally talking about almost the Liberation Day lows again, right down in this vicinity. I mean, so that would be a huge, huge downside move on the semiconductors. Now, one of the things that caught my eye was taking that low and bringing it up through this high right here and bringing it up. And lo and behold, look at what we get. We essentially get a line that, look, right through these highs, we hit it right here. So you hit it, look at this, right there. And look, we're just about to hit it again. And to me, that's important. Now you might say, okay, well, it's a trend line and it goes through that pivot top. Granted, yes, that was the biggest pivot top since, because that was before the big drop during the Liberation Day sell-off. But also look at this, guys. This is very fascinating as well, how you make that really it has behaved just like that. Here's your low. And then look, this is back in 2021, 2021 later in the year in 2021, even right here. We did briefly get below it, and then we reestablished. And look, right there and right there, we tagged it again. And so that to me tells me there's some teeth to that, right? You know, yes, we got below, but then we reestablished and it behaved until it finally broke down during the bear market of 2022. So again, we look at that, we have all those pivot points, and then we take it into account and we say, okay, well, you also have this high and this high there. And then now we have this high and we're nearing, and I say near because we're not quite there yet, but we're pretty darn close to the SMH hitting that line again. All right, now this is just a line, right? Now let's see if there's additional teeth by seeing if there's a parallel to it, right? So what we want to do now is we want to drag a parallel down. And when we do that, look at what occurs. So this is making me think this is a very important trend line. And the reason, again, I say that is because now look at this. We now, when just by taking a parallel down, look at what we've discovered. The bear market low of 2022. This was your lowest point for the semis, basically since the COVID lows, right? It was the pullback during the bear market of 2022. That low matches almost perfectly with this low, which then works perfectly with this low. Then we obviously had the last flush out of the Liberation Day sell-off, and the Liberation, obviously, was the subsequent sell-off following that before we bottomed. And then you can even see, look at this. We kissed it right here, and then we got back above, and then it was off to the races. So there is something to be said here for that level. This tells me essentially what I guess my point is here, folks, is that when you have a trend line that's connecting major points, and I want to stress this, you generally don't want to connect minor points, like major points, the COVID low to the 2024 high on the SMH. I think we can all agree if we look at this, like this was a major low, this was a major low, this was a major low, right? I mean, a major high. And obviously at this point, we don't know yet, but this, again, it's not just connecting arbitrary points, it's very specific points. And so that tells me that, again, the semis, while they do have a little bit more upside, in my opinion, they could be running out of fuel. All right. Lastly, we want to go to JPMorgan, arguably the most important financial company out there. Last week, Jamie Dimon basically said that there's cockroaches, meaning there's major debt problems within the regional banks, and we're starting to see banks reporting these type of things. And he says basically, if there's one, there's many of them. It's not just like one cockroach, right? It's like they usually hang out in groups in thousands, if you will. But one of the things I was going over here is looking at this and just saying, okay, well, this is a pretty clear trend line right through this level, right? I mean, if we look at this on JPMorgan, and what we do is we bring this up, and what we could see is that this now becomes a pivotal zone. And so what we're really watching on this is, look at this. So again, that we're using a parallel, and we can, by the way, we could stretch this even lower here. And I mean, I think it's remarkable because look at this. Look, if we just do that, we get this. And by the way, this even extends back here, but look, pivot low and then pivot low right there and right there. So, I mean, all of these are significant, but the one I'm drawing my attention to is, again, this one right here. All right. So this here is important, right? And I think it should be right in that vicinity. And the reason why this is important is because look at this. So number one, we're taking our major pivot high here and here, And then we also have these highs up here. And so that was your rejection zone. So this establishes that this trend line, so just the trend line, ignore the parallel right now. This trend line is major because it's a major high, and major high. Like literally, this was your previous all-time high here. Then we corrected, and then we went up. And so far, we've pulled back off this. So connecting those points makes a lot of sense. But then we look and say, okay, well, what about this subsequent trend line? Well, look, you have this here and right there. And by the way, I could drag this out and it would even go through these levels right down here and probably even further. But for just simplicity's sake, we can very easily see, look at all these lows along here. This one's a little far away, but then right through this point. And so notice today, JP Morgan's getting a bounce. It's getting a bounce because it attacked this line. But the point being is JP Morgan, this is your line in the sand. So if you want to look at JP Morgan's own cockroach, if you will, if it breaks this 297 level and confirms, it's going to have, or likely will have, a much bigger fall. My first target is going to be around the 269 level right here. But look at that. Look at the parallel on that chart and how it behaves. Now, I'll throw one sweetener in for you guys. All right, for those of you that have watched the video all the way through, this is a sweetener here. This is one of my favorite trades right now, Kava. Kava, again, is a fast food, or it's fast casual, I guess. It's a little healthier than fast food. But the key here is look at this high. It broke above. Look at the low. And then look, we just hit it and it's consolidating. This chart to me, little V bottom or cup and handle, I think this is going to get a move to the upside on Kava. Be ready for this one, guys. This one might be one of the few cheaper stocks out there. Listen, valuation-wise, needless to say, it should have been all the way up here. But I do think in this market environment, this could be setting up for a rally. First target would be $72. Then second target would be about 84, a gap fill. All right, guys, lots of good alpha here, lots of good education. That's what I'm always all about. Thank you so much. Don't forget, share with friends and family. That's all I ask when I do these videos, is just if you know of someone who would find this useful, send it right over to them. Have a great rest of your day. I'll talk to you soon. Take care.